Hello, this is Will from Will to Trade. You can check me out at willtotrade.com. Fill out the form, get invited to a 2 free week trial to our chat room. Of course, we do chat every day, Monday through Friday, starting as early as 9 a.m. Eastern Time, sometimes for the first couple hours, and then sometimes, of course, all day long. I give alerts out in the room, let people know what I'm looking at, what I think would be a great trade to take, and also I make some videos from time to time because I want to teach people, help people be better traders. I haven't made videos for a while, so today I decided to make a series of videos, each video on a different ticker that's made some moves either yesterday or the day before. So this video is on INVN. So I'm going to put in front of the screen some of my rules, some of my ideas about trading, and I'll probably put them in on all these videos. So let me just pull in these rules here. So there they are. So I want to break down trading as simple as possible. And again, this concept, this theory, this idea is really mostly for the day trader, for people that are buying and selling throughout the day, and mostly for people that are going long. Some of these concepts, of course, can also apply if you are swing trading and if you are short selling. You just invert them. I'll go over that here. So 3 steps to making money trading. So I want to keep this as simple as possible. A lot of people want to complicate trading into being very in-depth and very complex. But step 1, just know what stocks to trade. Pretty straightforward, pretty simple. Step 2, know what price to buy. Step 3, know which price to sell. Sounds easy, sounds simple. Yeah, okay, that's pretty common sense, but it's really that easy. If you just know what stocks to trade, you know where to buy them and where to sell them, you'll make money trading. The types of trades that to take. These are the type of trades that I take. These are the type of trades that I alert. These are the type of trades that I recommend, unless you become very advanced. Number 1 are the breakouts. This is the simplest kind of trade. These are trades hitting new highs of day, trades that are stocks that are going higher and higher as the day goes on and capturing that move for that push up. These are the most straightforward, simple, basic trades that we want to take. And these are trades that if you can master the breakouts, you can even trade breakouts and breakouts alone and make a great living for yourself. The second kind of trades is what I call groundhog day trades. Some people may call these range-bound trades. Basically, any trade that is going from a support line to a resistance line back and forth. So, for example, you could buy a stock at $1.50 and then sell it at $1.80. It may pull back to $1.50 again. You buy it at $1.50 again. You sell it at $1.80 again. Stocks that are making like a wave kind of form. And then type number 3 will be retracements. These are a little more complex. This is when a stock pulls back maybe to an initial starting point, or maybe a very initial point of resistance, and then you buy it and sell it again. Again, it's a little more complex than the breakouts. That's why I recommend breakouts. And then the type of trades not to take are the chop, chase, or chatter, and I threw in the bonus, the crap. So these are the 3 C's or the 4 C's of stocks you don't want to take. Now, I'm making a video on INVN, and interestingly enough, INVN is a stock that we did not alert, we did not trade, and I recommend you wouldn't trade it, and I'm going to explain why. And it kind of falls in the category of stocks not to trade. So let me move this to the side, and this was the beginning part of the day. It's really not doing that much, going from like 8:30 to 8:40, not a lot of volume, not a lot of excitement. Some news came out, and then all of a sudden in 1 minute, bam, there's this huge candle. Now, if you happen to be watching the scanner, or if you happen to be watching the stock, and you're able to get in, I would say probably between like $8.80 to $9. I mean, again, that is, you'd have to be lightning fast. You would have to be quick draw McGraw. You would have to be just nonstop updating every scanner you possibly can think of, and then see it, open it up, and immediately place an order, and immediately hope to get filled between 880 and 90. If that was the case, then I would say yes, great, go for that trade, because that would be a breakout. The stock obviously is breaking out. The stock obviously is pushing up. So it's obviously a huge candle compared to all the candles before it. But most people are not going to be that fast. Most people are not going to be on every single tick of every single stock out there, and most people are not going to be able to capture that move. So the next thing that happened is the stock got halted, circuit breaker halt. Of course, it made this huge ramp up in 1 minute. The markets want to pause the move. The best thing to do, especially if you're a new trader, is once the stock is in a circuit breaker halt, don't trade. Just wait. Sit on the sidelines, see what it does. Just wait, and then make a move from there. So now, let's fast forward to the next candle, which is like 5 minutes later. Okay, here we go. And this candle is actually a red candle. It hit a high of 1102. If you were lucky enough to buy in between 880 and 9, you're probably going to sell in this candle or sell in the next candle, or basically just sell up in here. And if you did that, you'd be super happy because you would be making, anywhere from like $1 to $2. It's a great trade. Imagine you bought 1,000 shares. You could be up $2,000. 5 minutes. Fantastic. But if you miss that big green candle over here, you want to wait. You see this basically this red candle, and then you have 1102. Now, what you would do is you would draw a line at either 11, 1102, or 1103, just to be safe. Let's just say 1103, just to be safe. Okay, and I'll even make this a blue line here, just to be safe. Okay, 1103, which basically says, hey, if we have another breakout above where we already broke out, then I would be interested in buying. You kind of already know the answer because this tells you it's high 1102. So let's just kind of fast forward and look what we have. Up and down, up and down. Now this is what I call the chop. This right here is the chop. And this becomes something that a lot of traders can get excited about and say, hey, Will, look at this. This is a huge pop up, and then it popped up even more, and this stock is going and going. I want to get in now at like 1040 for that push above 11, and then it's going to go into $12, $13, and I'm getting in early, but not really, because you're really just in the chop. And look at the volume. Volume is huge here, and after the halt, volume kind of fades away. If the volume increases, sure. The safest trade on this one, if you missed buying here, will be buying at this blue line. And I can zoom out, and it's pretty obvious that, look, it never got there. We'll go ahead and look at this in a 5-minute view to sort of see the big picture. So it's trading pretty flat. We're assuming you're not in here because not much is happening. We're assuming you did not get in on this big green candle because it happened within a minute, and maybe even within seconds. We're assuming you're not getting in on this candle here because you're waiting, and we're hoping that you don't get in here because all this is chop. If you get in at 1040, 1050, and then you wait, maybe by the end of the day you sell, you're back down to 1040. You had to wait a couple hours. You didn't really accomplish much of anything. If and only if it made its move to either 11, 1102, 1103, 1105, if it made a move up, then you could buy, and then that would be the next breakout level. So this isn't really that exciting of a stock to showcase because there's no trades on it. But again, sometimes not taking a trade is just as good as taking a trade. Sometimes not taking a trade that you shouldn't take can be just as helpful as taking a trade you should take. Because it looks exciting. It looks like, wow, this could be something great. And it could be if it had a continued breakout, if it went to 1103 and then some. And sometimes that happens. Sometimes these stocks can even double in a day, basically going from $8 to, maybe up to 16. And it's good to be ready, but you want to draw lines. Somewhere, somehow you want to draw lines. I just drew a line here, 1103, and I would be ready. And then I can place an order. So you know what? I got my order at 1103. If it gets to 1103, I'm a buyer, and then we'll go from there. So hopefully you enjoyed this video. If you did, give it a thumbs up. If you really like it, go ahead and subscribe. If you're interested in joining our room, go to willtotrade.com. I'm going to make some more videos. Hope you all have a great day, great weekend, and I'll talk to you later.